In the late 1990s, the world was in the grip of the dot-com bubble. Fortunes were being minted overnight in technology stocks that promised to change the world. And Warren Buffett, arguably the greatest investor in history, was missing all of it. He was publicly ridiculed in the media as a dinosaur, a relic from a bygone era who was out of touch. And yet, from the market's peak in early 2000 to late 2002, while the tech-heavy Nasdaq index crashed by nearly 80%, wiping out trillions in wealth, Buffett's Berkshire Hathaway was profitable. He wasn't a prophet who predicted the crash. He was a disciplined practitioner of a mental model that is more important than any stock-picking formula: the Circle of Competence. In the next 10 minutes, you will learn the simple but profound logic behind the Circle of Competence. You will understand how to define the boundaries of your own circle, and you will learn how this single principle can protect your investment portfolio from the single most destructive force in the market: your own ignorance. The Circle of Competence is a mental model that is breathtakingly simple in its definition. It is the principle that you must only invest in businesses and assets that you can understand with deep, genuine, and demonstrable expertise. As Buffett himself has said, you don't have to be an expert on every company, or even many. You only have to be able to evaluate companies within your circle of competence. The size of that circle is not very important. Knowing its boundaries, however, is vital. This is not a suggestion. It is the central, non-negotiable rule of intelligent investing. Why? Because it is the ultimate antidote to the Dunning-Kruger effect and the arrogance of overconfidence. The financial markets are an arena that is relentlessly and ruthlessly designed to find your weaknesses. The biggest financial mistakes are not made when we invest in a bad company we understand. They are made when we invest in a good company that we don't understand. The goal of the professional investor is not to hit home runs. It is to avoid striking out. It is to avoid the unforced error. The Circle of Competence is the rule book for how to do that. This principle seems almost trivial, yet its rigorous, unflinching application is what separates the legends from the legions of failed speculators. So, how do you actually define the boundaries of your own circle, and what does it look like to operate strictly within them? Defining your circle's perimeter is an act of profound intellectual honesty. Theory: the three pillars of competence. A business or an asset is inside your circle of competence if, and only if, you can confidently and clearly answer three fundamental questions about it, without resorting to platitudes or vague jargon. How does it make money? You must be able to explain the company's business model as if you were teaching it to a child. Where do its revenues come from? What are its major costs? Who are its customers? What is its durable competitive advantage? What protects this business from competition? Is it a powerful brand, a network effect, a low-cost production process, or high switching costs for its customers? This is the company's economic moat. If you cannot identify the moat, you cannot understand the business. What is a reasonable valuation for it? You must be able to calculate a sensible range of intrinsic value for the business based on its future earnings power. This demonstrates that you understand its economics well enough to price it. If you cannot answer all three of these questions with genuine, deep expertise, the business is outside your circle. Period. Analogy: the expert witness on the stand courtroom. Imagine you are in a court of law, on the witness stand, having been called as an expert witness on a specific company you own. A brilliant, hostile lawyer begins to cross-examine you. Can you explain the company's unit economics in its European division? Can you detail the primary risk factors listed in its last 2 annual reports? Can you defend your valuation against these 3 competing models? If the thought of that cross-examination fills you with terror, the company is outside your circle of competence. You are not an expert witness. You are a hopeful speculator. Example: Buffett's circle in action. Inside his circle, think of companies like Coca-Cola, American Express, or See's Candies. Buffett understands these businesses with profound clarity. They have simple, predictable business models, powerful brands that act as durable moats, and he can reasonably project their future cash flows. For decades, this has been the core of his wealth management philosophy. Outside his circle, historically, for most of his career, Buffett openly admitted that fast-moving technology companies were outside his circle. In the 1990s, he didn't know how to predict which software company or internet portal would win, nor could he confidently value them. So, he did nothing. He was willing to endure the short-term pain of looking foolish to avoid the long-term pain of losing his investors' capital. The theory is simple, but the practice is difficult. There are two traps that even smart investors fall into. Pitfall number one, the illusion of knowledge. Reading a handful of articles, watching a few videos, or using a product does not place a company inside your circle. This is shallow familiarity, not deep competence. True competence is earned through hundreds of hours of focused study, reading annual reports, analyzing competitors, and studying the history of the industry. Pitfall number two, competence drift. Your circle is not static. An industry that you understood perfectly a decade ago may have been fundamentally disrupted by new technology or new competitors. Competence is not a destination. It is a state of constant maintenance. You must keep learning to prevent your circle from shrinking. Avoiding these traps requires a level of intellectual honesty that is rare. But for those who achieve it, there is an advanced application of this principle that turns it from a defensive tool into a powerful offensive weapon. The advanced strategy: hunt on the perimeter. The most fertile ground for finding unique, world-class investment opportunities is often right on the edge of your existing circle of competence. The goal is not to have a static circle, but a slowly and deliberately expanding one. How it works. Once you have defined your core area of expertise, your primary job as a learning machine is to identify adjacent industries or business models that are logically connected to what you already know. An example: if your core competence is in the retail industry, you have a deep understanding of consumer behavior and supply chains. An adjacent circle you might choose to study is payment processing networks, like Visa or MasterCard, as they are a critical part of the retail transaction. You would then spend months or even years dedicated to studying that new industry until it is firmly absorbed into your circle. Why it's so powerful? This systematic expansion allows you to build a unique, non-consensus expertise. While the rest of the market is chasing the same handful of popular stocks, you are building a deep knowledge base in less glamorous, less crowded corners of the market. When a rare opportunity arises in that newly acquired area of competence, you will be one of the few people on Earth who is prepared to act with the speed and conviction that generates true, long-term outperformance. Let's distill this into the three essential principles of this master concept. The circle of competence is your most important rule. You must only invest in businesses that you can understand with deep, genuine expertise. Know your boundaries. The size of your circle is irrelevant. Knowing its perimeter with brutal, unflinching honesty is vital. If you cannot clearly explain a business's model, its competitive advantage, and its valuation, you must not invest. Patiently, expand the perimeter. The advanced strategy is not to leap from circle to circle, but to methodically study adjacent industries. This allows you to build a unique and powerful expertise, preparing you to seize rare opportunities that others cannot see. In the long run, your investment returns will not be determined by the size of your circle, but by the discipline with which you operate within it. If this analysis provided you with real value, invest a single click in the subscribe button to get daily access to the Codex. Knowledge is the new capital. We'll see you tomorrow.